Well, good morning, everybody. It is Tuesday, the 20th of August. Welcome to another webinar. Just all give me a yes if you can hear me and see the screen. You should be looking at the Forex Factory calendar. Good morning, Anthony. Marcus, welcome back from your 2-week vacation. Yes, yes, yes. Okay, this is YouTube Live. What that means is there is usually a 10 to 15 second delay in terms of you typing in your response and me getting it. So there may be a bit of a delay if you have any questions to do with trades or setups or anything like that. And if you do have anything setting up, please post it in the chat. We'll go ahead and take a look at it. Other than that, for the Forex Factory calendar for the 20th today, there is no news out that interests me. So pretty much a news-free day. We do have an FOMC member speaking at 11. Not really anything I'm really interested in. So nothing for me on the Forex Factory calendar. We will move that out the way. Hope everybody had a great weekend, by the way. I did. I've got some family over at the moment. I've been spending lots and lots of quality time with them. And actually yesterday went down to the beach, playing on the beach, and I ended up stubbing my toe on a giant rock that some kids had left in the middle of the sand. So I have a black and blue toe this morning. So didn't sleep very well as a result of it. Lots and lots of pain. So thank you to my family member for chasing me on the sand and me stubbing my toe. I hope all of your toes are okay this morning. So we'll run through the currency pairs in order. As usual, we do still have the workings out from the last webinar, so I will be running through those just before we do the top-down analysis. But I am in a few trades that I've been in for a few days. But first of all, we'll take a look at the Aussie Dollar CAD. And again, guys, if you do have anything you want me to take a look at, please go ahead and let me know. On the last webinar, I spoke about this AB equals CD pattern, the double top that had formed. Well, that got violated and it then produced another double top. You were not stopped out and that thing went down and hit targets. So congratulations to anybody that took that. Let's go and take a look at the dailies and see what's going on here. So looks like we're retesting down here. However, this is not a confirmed retest or double bottom until we physically violate the high of the V point just here, guys. So right now we have no confirmation for me that we're going to go lower, no confirmation we're going to go higher. Simply this is just a case of waiting, and because this is on the dailies, even if we were to retrace up to this level, so if you were looking at trend continuation, something like this, this would not be a trade I can take because we've retested down here. So straight away this is going to be a no-go for me on the daily time frame. So let's take a look at the lower time frames. We take a look at the 240. We had a move lower, we had this breakout pattern, we had a move lower, a pullback, a move lower, only just making a new low, then we violated to the upside, we came lower, and we've come up again now. So this is not going to be a head and shoulders for me, even though it has the formation of a left shoulder, a head, a right shoulder. We didn't come into a structure level, and this just wasn't a head and shoulders for me. So you can look at this as a potential rotation. I would wait for a violation of this level just here, guys, because at the moment we haven't violated the outside return. Look for a pullback and then maybe look for a long opportunity. Problem is I just have no indication as to how high the market can actually come here. So pretty much nothing on that. Martin wants to take a look at the New Zealand dollar on the 4-hour Garley. We will go and take a look at that in a moment. Is that at market, Martin, or is it a little ways off? On the Aussie Dollar CAD, what do we have? Well, we're just coming into structure highs. There could be a little counter trend trade here. I don't think we have an AB equals CD pattern. Well, you do actually. And look at that, we've just come up to that zone to tap it. So when this happens, we can look for multiple things. Usually look for a rotation pattern within the wicks. But we can look for some other things as well. We look for psychological numbers. There isn't one. We look at the RSI. We did not go overbought. We can look at some fib confluence. We look at an inversion. There isn't one. We look at an extension. There is a 1618 up there, but we have not tested it. So not a great deal of confluence other than the AB equals CD pattern coming into minor structure. But this minor structure, you are then allowed to drop one time frame lower and look for a rotation pattern. And usually what happens is we get a double top, and we didn't. And instead it looks like we're going to get a head and shoulders. Now, targets for me on this would be a 382 fib from the swing low to the swing high. And at any time, guys, if this is going a little bit too fast for you, just let me know and I'll slow down a little bit. Martin says the New Zealand dollar is at market, but counter trend. We'll take a look at it. Advanced patterns for me, they typically happen in consolidation, and it doesn't really matter to me if they're trend continuation or counter trend. The trend for me doesn't matter because regardless, you're really just looking for a small reaction. You're not looking for any type of big moves with those, unless it is trend continuation. So looking like you've got a head and shoulders here. With this head and shoulders, you could look in the wicks of the left shoulder, and because the head and shoulders is valid here on the 15, you are then allowed to drop one time frame lower and see if a double top has appeared within that left shoulder. So we will do that. We will see if there is a double top in that zone. No, there is not. So if you're aggressive, you could look at entering this just based on a lower close, which you already have. This isn't going to be big enough for me. There's only 9 pips of reward, but it's nice to see that the AB equals CD pattern could produce this head and shoulders. And you could actually then play for an extension here, actually, because head and shoulders, as a minimum, I play for an AB equals CD pattern. So instead of playing for the 382 fib of the AB equals CD pattern, you could play for the AB equals CD pattern of the head and shoulders, and it would increase your reward a little bit. You'd have 14 pips for a risk of, well, you're going to have to go an ATR above the left shoulder. The ATR is only 3, so you want to be 2 ATRs above there because you're dealing with a lower time frame. So you're looking at about 10 pips of risk for 14 pips of reward. Once you include fees and front running, it's not really something that I'm interested in. Any questions on the Aussie CAD? We will keep it up for next time though, and we'll come back to see if that trade went on to win. Even though we can't get involved with it, I do like to see the outcome of these trades. I will go ahead and move this out of the way then. Move it to the left. New Zealand dollar. Okay, New Zealand dollar. Before I delete everything off, on the last webinar, guys, we spoke about this triangle, which I missed. I think it happened at 4 in the morning or 6 in the morning it happened. Just to recap, we had not a great pole, but we had the market coiling. So we had parallel level down at the bottom here. We had a descending channel line just here, and to give you extra confirmation, we had a double top just here, which we had a confirmed break below, close below. It pulled back for a 26.18, and that would have meant that that gave you the additional confirmation you needed. So nice protective stops, just 16 pips of risk, for 41 pips of reward, around a 2.5 to 1 reward to risk there, which came off very nicely and hit targets. Happened at 6 at night for me for the 26.18 and 10 o'clock at night for the double top, so was not something I could get involved with. I do say quite often these trades actually happen a lot for me. It haven't happened recently, but this is the type of setup that I usually get involved with, and it happens quite a lot. I do say when we're in these channels, whether it's a descending channel, ascending channel, or just any form of channel, flag pattern, whatever it may be, that we get these rotation patterns, and right there was your classic entry. In fact, if you were able to get involved with the double top, this was your reward to risk. Okay, and it happens a lot. Hasn't happened recently though, but it does happen a lot. So let's delete it off. Nice to see that the analysis was correct. Shame we didn't get involved. Okay, 4 hour Gartley. So here on the dailies, what I'm going to do is put a structure level in at the very lows of structure just here, and we're going to see, do we have a confirmed violation of that structure level? And the answer is no, guys. We do not have a confirmed violation until we breach this very long wick. Until that happens, we are trading inside the structure zone, which technically means that we are holding this structure level. So no confirmation we can go lower. Let's take a look at the 240 then, and at this Gartley pattern. Okay. There could be, there isn't going to be a Gartley for me here, Martin, so shoot me an X leg if you can. You could make the case for this being the Gartley up here, but that only hits a 50%, not a 618, so that's not a Gartley. It could be, not too sure if we hit the 618 this way. Yeah, it looks like we do. Okay, so I think Martin is looking at this. X to A to B, B to C, CD completion. The concern for me here is that you don't have a retracement for the C leg. So even though you can see this big candle that comes up to the 61.8 fib, there is not a clear retracement. There is no gap in between them. So this actually may be valid on the 60. Yeah, it wouldn't be one for me, Martin. Even here on the 60, you can't clearly see that there's a swing. This is just consolidation for me. So it wouldn't be one for me, but if it is for you, obviously it's down to your own eye and what you've tested. You have a Gartley pattern. Overall, I am still expecting price to come to this lower level, guys. The reason for that is we had this great big elephant, this very directional move. If you highlight the wicks up here, we came up into the wicks. We simply just tapped this area and we've been slowly dribbling lower. So I do think price can come a little lower. There's just nothing here, guys. You could have maybe, but it wouldn't be valid for me, but I'm going to draw it out anyway. If you draw out the trend here, new low, pullback, new low, pullback, new low. When you looked for the pullback, you could have looked for the last chance entry. The problem you have here is we double bottomed. So I couldn't play for the extension because of the double bottom, but you can see clearly we were in trend. It was an ugly trend, but we were in trend. We'd come up to the wicks, and if you were getting involved in trend continuation here, I would drop one time frame lower. So the trend's on the 60, you're allowed to drop one time frame lower, see if it did offer you a shorting opportunity. And look at that, guys, it did. There you go. So double top up here. Clearly see that level was held. If you had the RSI confirmation, it was a trade to take. Did we go overbought on the first test? Yes, we did. Did we have divergence? Yes, we do. All the boxes were ticked. That meant that you got a really good entry here, guys, if you got involved. So I can only enter on the close of the candle, which would have been here. Stops would have been an ATR above the left test. Let me just work this out, guys. The ATR 4 pips, so I would have gone 2 ATRs above the high here. Okay, so that would have been 8 pips. That would have made me 6. Let me scrunch this up a little bit. Okay, so that would have been the risk for me. Targets. Well, you could have done a couple of things here, guys, couldn't you? You could have either played for a retest of the lows, which was down here, or you could have played for that extension. Either way, you're getting a good reward to risk. Was this a trade anybody took? Nice double top with the RSI confirmation. You're in trend, even though it was ugly. Doesn't matter. The trend is the trend, and you had the valid entry with conservative stops. In fact, 2 ATRs there was way too big. 1.5 ATRs was all you needed. Anybody get involved with that trade? looking like you are going to come down and hit targets. Only 22 pips. Well, still, if it goes on to win, it's 22 pips nonetheless. Marcus said no, but it's nice to see. Nice to see that the rules that we have in place do work. So what else do we have? We'll carry on with the review. We'll take a look at the Aussie dollar next. So Aussie dollar. Marcus says, yep, worked well, good to see. Aussie dollar, I really don't have a direction on this. We have a major level of structure here, guys. Major level is defined as seeing a major reaction. Look at the size of the wick. High probability we could see a reaction again. But we haven't just seen this lovely V-type reaction. What we did is we came down, and if we zoom in, we saw a lovely almost pin bar here, followed by a higher close, and we have really had here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days now of sideways movement. So when we see this, these are areas we can get involved with. If you believe the market is going to go higher because we've held structure, well, you have an entry, or at least you could have on the lower time frame. Or if you believe it's trend continuation, you have an opportunity to get involved because we have this sideways movement. Now, I really don't have a direction on this. We've obviously held this major structure level, but we are making lower highs here, guys, aren't we? We're coming lower. So we could see a pop, maybe up to this zone. Maybe that would be a good area to look for a rotation pattern and look at shorting it. First target's there, and I don't have enough data loaded, but you could then maybe look for holding second targets for some sort of extension here. Now the story is different on the 240. On the 240, guys, we have a confirmed violation to the downside. So reading the trend, new low, pullback, new low, pullback, new low, pullback, new low, and then we violated to the upside. So there would be no trend continuation here on the 240. It's just junk for me, really, guys. I was looking at this potential channel just here. It is still valid, guys. It is still valid. Within these channels, you want to be looking for rotation patterns. Now, this is not going to be a flag because we're not confirmed coiling. In actual fact, you could draw this channel out this way as well. You could draw it out both ways. I would be inclined to draw it this way because this is the closes of the candles. Like, this is how I like to draw them, and typically this is right more times than it's wrong. And up here you can look for rotation patterns, rotation patterns, rotation patterns, rotation patterns. Repetition there, guys. Rotation patterns. Triple top, 1, 2, quadruple top up here, double top here, move higher, pull back, move higher, pull back, move higher, potential head and shoulders, guys, move to the downside, playing for a retest of the channel. So that is a potential just there. Let's drop to the 15. And similar story here, guys. Move higher, pull back, move higher. We know structure is being adhered to on the higher time frame. Move lower. You could be looking at a head and shoulders here, and we just repeat the process, guys. Highlight the wicks of the left shoulder, drop down the time frames. Was there a rotation pattern that we could get involved with? We will give it a minute for my computer to make a move. Here on the 5, here on the 5. It'd be very weak, but you could make the case for a low and tight flag. You've already had the breakout. You could then wait for the pullback and stops above this structure level and a chance to short to the downside. Or this may not be the right shoulder, and we may see a deeper retracement. We may see a retracement back up to this zone, and you can then look for another entry reason up in that zone. So a few things to look out for, whether you've got an entry now or whether you wait. Quite a few things happening on the Aussie dollar. Any questions on the Aussie dollar though, guys? I'm still waiting for Head and Shoulders to kick in. It's been several months now, and haven't really had a decent one that meets my rules, apart from the Aussie Dollar Swiss that I'm in. That one's, I'm hoping we're going to violate structure today. We'll run through that later. So yeah, if you're looking at getting involved in this, even if you're looking at getting involved here, you've got a 3-bar reversal, you've got a lower, lower, lower close, just in this zone up here. Stops would need to go an ATR above this high, so they'd go up here. So you'd be looking at around this much risk. And if you're looking for a retest of this lower level, boom, down to this zone, you've got a very positive reward. 2 Head and Shoulders, structure holds, a channel, 20 pips of risk for 47. A lovely 2.5 to 1 reward to risk as well, something like that. So opportunities there. We will come back to that tomorrow and see if it played out nicely. Euro Aussie, guys. Euro Aussie. I was just actually looking at this here. Didn't quite come down to the zone I was looking at. You could make the case for a potential flag pattern. We'll take a look at it shortly. Let's go out to the dailies, and we know that we're still looking at the market coming lower based on this structure hold just here. Looking left, major level of structure here that held and saw a major reaction. That was 6 years ago, and we could see quite a big retracement here. Trend line, guys, trend line. If you believe we can come down to that level, there is still 400 pips for this to come lower. So let's go and take a look at the 240. Love trend lines. Love trend line trading. New high, pullback. This is a swing in the market. New high, the left shoulder, head. Right here, we violated the left shoulder, giving us an initial structure low, an indication of a rotation, move higher. Left shoulder, we see a rotation pattern. Double top here, confirmed break below, close below, pull back for a 26.18 and another low, putting us in trend. So this is now a new structure low, and as a minimum you're going to be looking as a minimum for an AB equals CD pattern. There is still room for this to come lower, and bigger trend line, there is obviously a lot more room for that to come lower. Let's go and take a look at the 60. Okay, I was looking at this, it wasn't something for me, but new low, pullback, new low, pullback, new low. This is the entire outside return. You can look for a rotation pattern within the wicks, and as you can see, we got the double top, we got the retest. It wasn't one for me because we did not have the RSI confirmation, we didn't go overbought, and there was no divergence. But it is nice to see again that it does work, and you had the double top, you've come down. First targets would have been a retest down here, and second targets you would have held for that AB equals CD pattern, which actually would have come in. I would have actually just played a little bit further down to this level of structure here. So my secondary targets would be down there, and again third targets maybe that bigger trend line. Unfortunately, it means because we've not violated this level of structure, there's no opportunity just here. Good morning, Stuart. But down on the 15, down on the 15, if this is a valid pole for you. Now what concerns me is this: we have a leg in it, so maybe you want to take the pole from here, and it's going to be a very steep flag, and you're going to get your fourth touch up here, which is way too close to the start of the pole. So this is not going to be a flag pattern for me. Instead, are we going to have a Gartley? Nope. 382. No, not going to be anything here for me. The only way it would look for me would be a flag this way. And your fourth touch would actually come within this outside return. But again, the flagpole, we had a retracement in it, and don't usually see that. So as we come up to this zone and the fourth touch, look for what we usually get within channels: rotation patterns, the retest. If you got a nice retest up here, then that would be an entry. First target's here, and then hold your second targets. The way price is moving, we would have to come up to here and just kind of hug this level for a while. But yeah, look for a retest on that zone. See if you can get an entry with tight stops. It should offer you something like a 3 or 4 to 1 reward to risk for first targets. That again, wait and see. We have to wait. Any questions on the Euro Aussie? Stuart, we've been through a few trades. There's an opportunity on the Aussie Dollar, Aussie Dollar CAD, sorry, potential head and shoulders, only on the lower time frame. You still have the Aussie Dollar trend, which now has, channel, which has now produced lots of rotation patterns, couple of head and shoulders, structure hold, lower low, lower close, chance to get involved and play for a retest of the lows. So a few opportunities out there, guys. I'm going to move the Euro Aussie back. And take a look at the Euro Yen. Now I deleted the workings. No, I didn't, sorry. I was just on the wrong time frame. So Euro Yen, last time we looked at this, the only thing that was standing out to me was the breakout on the dailies. I believe this is going to be a low and tight flag. So what confirmation do we have that this is a low and tight flag and not a double bottom? Just before I come back to that, Marcus says nothing for him on the Euro Aussie. Martin, could it be a LNTF? Something time frame at this point. Low and tight flag. There we go. Low and tight flag at this point. No, not for the Euro Aussie. for the Euro Aussie. Let me just go back to the 60. No, low and tight flags for me appear in trend or when we've just violated major structure, and a low and tight flag has to be like this. Okay, so that would be a low and tight flag. A normal flag, a standard flag I suppose you can call it, is like that. My drawing's a bit wonky, but you get the idea. So wouldn't be a low and tight flag for me. Here, however, here on the dailies, this could be a low and tight flag, and there's multiple things here confirming that we may get the breakout, guys. Okay, first of all, bigger picture. This was our most recent structure level here. Zoom in. Do we have a confirmed break below, close below? The answer is yes. Number two, do we have room to come down to our next major structure level? The answer is yes. Number three, are we in trend? Move lower. We've already seen a breakout pattern, which is a sign that we're moving directionally, we're in trend, and when we see one breakout pattern, we typically see more. Move lower, pull back, move lower. So this is not a double bottom for me because it did not occur at structure. We're in trend, we're already seeing rotation patterns. Let's zoom in and see what other confirmation we have that the market may indicate to us, that we could see a breakout. Looking at the candlestick formations, big bullish candle, structure hold, big bearish candle, structure hold, 1, 2, 3, 4. Can somebody please type in what the meaning of this candle is right here? The one that has a very large wick to the upside, a very small wick to the downside, and we closed down at the lower level of the structure level. What does this candle signify? Is it bullish buying pressure or is it bearish selling pressure? BS for bearish selling pressure. Rejection, selling pressure, exactly. So we could see a breakout here, guys. Okay, plenty of selling pressure. That means that all the boxes are ticked for this to be a breakout pattern. Now, unfortunately, due to the size of this and the terrible reward to risk that you'd have, because if you entered in now and you've got this giant wick up here, you'd have to go an ATR above that level, which is 98. You could probably reduce that to half, because we are at the 112 psychological number, yeah, so 112.50s. It would mean you would have a risk of 250 pips, and unfortunately your reward would probably only be 100. So, however, as I do say, with breakout patterns, it does not matter if you don't get your optimum entry. Breakout patterns, we typically break out with force. Look what happened on the last breakout flag pattern here. We broke out with some force, retraced, and then boom, there was the force. So that means that we can drop to the lower time frame, and you're really going to be looking for a violation down here, and then the market, once we violate or start to violate the structure level, we should be in free fall and should have a pretty smooth ride down to targets. Problem is when you drop down the time frames, it becomes ugly. Very little here to actually go off. You had this entire level here, this wick. I was paying close attention to it, but due to the size of this wick, safest spot for stops is above it, and you're still having a 200 pip stop loss. So we'll keep dropping down the time frames, but my feeling is there won't be an entry until we start to get the breakout. So you'll have to monitor it, or we will have to monitor it. And you can see just junk. Sideways movement, guys, just nothing here to get involved with. 15, nothing. So really, I would monitor it from the 16 and 15, and you can be aggressive with your entry here. But again, you're looking for a violation of this level. If we're moving very directionally with big candles and we're closing right at the very lows, great. If not, if we're kind of stair-stepping slowly lower like this, well, I would wait, because we are not breaking out with force, and because we're not breaking out with force, we could see a retracement, and you could then look for a rotation pattern, rotation pattern, rotation pattern, then get involved with stops above the double top or head and shoulders, and then play for the breakout. So many ways to get involved. Trading is just waiting. It's just waiting a lot of time. I'm waiting for my drawdown to end, waiting for new profits to come, waiting for setups to happen, then it happened at 6 in the morning when I'm asleep. It's just waiting, guys. So yeah, I am expecting the breakout on there. That will I'm sure that will happen this week. We'll just have to monitor. Any questions on the euro yen? If not, I will move it off to the side. What else have we got, guys? We have Euro New Zealand. Okay, we'll take a look at the Euro New Zealand. How are we doing for time? 10:05. Potential flag. Wasn't very happy the way it was setting up. In fact, guys, I'm not going to bother doing the Euro New Zealand. There's nothing on it. Let's go and take a look at the Euro Dollar. Euro dollar is a trade that I am in. What am I in here? So if we just look at the workings out from last time, then we had this level of structure up here, an inverted triangle, and these things can break either way. A triangle breaks to the upside, an inverted triangle can break either way, and we broke to the downside. So what did we do from that point? Well, we had the move lower, the pullback, the move lower, the pullback, the move lower. This was this is on the 60. This triangle broke out and hit targets. I got involved in the 15 because it was also valid on the 15. Stopped me out by 2 pips as usual, and hit targets. But the middle of these patterns are the areas you want to look for the continuation. You only want to look for it when there is room to come to the downside, and as you can see, there is room to come to the downside. So I got involved here. I can't remember what my entry was. May have just been a lower, lower, lower close, may have been a double top. I can't quite remember, to be honest. Let's take a look at the 15. Cannot remember what my entry was. Stops go above the outside return here though, and targets are down at this lower level, just here. So if we violate this level of structure here, guys, and we have just put in a lower, lower, lower close, so 1, 2, 3 tests here. I am expecting this level to be breached, and once we start to breach that level, it could be quite a smooth ride down to targets. So I think it's worth about 60 pips that trade, something like that. Nothing else for me though on this. Let's take a look at the 15. Nothing here on the 15. Again, you're looking for a violation of the structure level. Seeing a little bit of reaction now at support. Nothing. Martin, did you take the Aussie dollar CAD? No, bit too small for me. Didn't take it. Say bye-bye to the euro dollar, guys. Bye-bye until tomorrow. Pound Aussie. Oh, I forgot we had a back pattern on the pound Aussie. I forgot about this actually. So let's delete everything off. Pound Aussie is a difficult one to read. We could be going bullish or bearish. I actually think we could see a pop to the upside, but I got no confirmation. So reading the trend, move lower, pull back, move lower, pull back, move lower. Now, if this was the high of the outside return just here, so this is the outside return, guys, this is the very high of it, for us to indicate that we're going to see a bullish move, we would need to see a confirmed violation of that point. Instead, what we did was higher, came down, held the structure level, went higher, held the outside return, came down, and has just been junk. Sideways movement. Overall, we could see the market come down to this level, but we could also now see a move to the upside because we double bottomed here, and that double bottom did actually come into structure, which is here, so would have been a valid, opportunity. Well, it was a valid double bottom if you were getting involved with it, but this could also be just a channel. Just a channel, guys. So just consolidation for me. I actually 1, 2, 3, 4. We actually failed to come down to retest again at the lows here, and we have been slowly dribbling up. Just very, very little on this for me now, guys. Okay, this was the other channel. Okay, so this was the channel I was in originally. This is how it was looking for me. Then what we did is we actually violated to the upside, and so here on the 240 you could be looking at the market going higher, and lots of channels, lots and lots of sideways movement. If we draw this on the close of the candles like that, we can actually move this down so it's on the wicks. Okay, that's the lowest point of the wicks there, and here on the 240 we did actually violate to the downside. So really it's just consolidation. We're just violating structure from one side to the other. What I was looking at was this back pattern. Within consolidation, this is when we typically see bats, ciphers, gartleys, butterflies, hedgehogs, whatever you want to call them. X to A to B, B to C, CD completion down here. We hit a 50%. We have a valid bat pattern. If you're looking for a rotation pattern, you highlight the wicks. You are then allowed to drop one time frame lower to the 15 and look for that entry. Euro CAD 2618. Okay, I'll catch up with the chat in a moment, guys. So here on the 15, nothing, just waiting for price to come down for a potential entry. You do have the 17800 psychological number there. It could offer you an opportunity. If you drop to the 5, you may have a little trend continuation trade here. Well, again, wouldn't be one for me, but if you read in the trend, new low, pullback, new low, pullback, new low, you highlight the entire outside return. You're looking for a reason to get short. Lower low, lower close. Well, you've already had one of those, rotation pattern. The problem for me down here is you've double bottomed. And again, I can't take trend continuation when we've retested. It's just going to take a quick look at the 5 range. You may have a lower time frame bat or gartley here to use as an entry. So it would go X to A to B, B to C, CD completion. Looks like you will also have an AB equals CD pattern within this zone as well, meaning your entry would be a little higher. Whether or not that pattern is valid for you, well, that's for your eyes and your eyes only, Mr. Bond. So on the chat, we have, what do we have? Stuart, gotta go, see you later, take care, Stuart. And Martin, wrong, I meant Euro CAD 2618. Take a look at the Euro CAD. Do that shortly. Let's move the pound Aussie out the way if there's no questions on it. Pound yen. Pound yen's a trade I'm in. I think I'm about 50, 60 pips up, something like that on this trade. So we also spoke about this last time. So before I delete the workings out, we are in trend. We had a breakout pattern that broke to the downside. The middle of them is where we look for your chance to get involved with trend continuation if there is room to the downside. There was, and we had a triple test up here, a little channel. I got involved with that and we broke to the downside. So we may see a pullback for a 2618. We may see a continuation. Let's do the higher time frame analysis starting at the dailies. Anybody have anything on this? Again, I don't have enough data loaded, but there is room to the downside here on the dailies. Move lower, pull back, move lower, pull back. This is your outside return where you can look for shorting opportunities. We'll go to the 240. On the 240. Again, this is, well, let me just redraw this out so we see the trend properly. New low, pullback, new low. This is the pullback. So this is your entire outside return. A lower low, lower close within this level will get you a second chance entry. You've just had the lower low, lower close. Stops an ATR above your outside return, which is 38. 50, 64, that should make, that's too much. Okay, so it would give you around this much risk. And if you're playing for a retest of the closes of the candles, it would now provide you an inverse reward to risk. As I say, I'm already involved based on that triple top. Mickle, not for me if double bottom on the 15. Okie dokie. Yep, and that was for the pound Aussie. Yeah, it wouldn't be for me either for that reason. But if it's for you, if you've tested it and it is profitable over time, regardless of the rotation pattern, regardless of the double bottom, well, you go ahead and you take it. You follow the plan. This was a trade where if we drop down to the 60, you're looking at this. Overall, the higher time frame is indicating lower, but if you read the trend here, move higher, pull back. So you read the trend on the 60, move higher, pull back. Then you had a confirmed violation of this level. You could have very easily made the case here for this to be a high and tight flag. I have rules for this though, and I actually, when I did the video, I spoke about the reasons why I didn't believe this was a high and tight flag. About 60 pips up on this trade now. Rewards about 210. I am due some big winners, guys. I am due some big ones. So you could see quite a bigger move here, way past this level. I'm playing for a few pips above that 12700 psychological number. Let's drop to the 15. That's what I like to see. Free fall, just free fall. Small retracement and free fall. All the way to my targets. That would be nice. Do you have a cipher on the 60? Nope. Nope, nope, nope. So nothing here, guys. Take a quick look at the 5. My toe is throbbing. It's black and blue. If you just joined, I've got family over and took them to the beach last night. We watched the sunset. I was swimming in the sea, and I've got my kids and my sister's kids are over, and they decided to wet me. And so as I started to run, the beach is usually completely clear, but some kids must have moved a big rock, weighed about a stone, and as I ran, I kicked it with my right toe, and it's black and blue this morning. So I'm limping. Nothing on the pound yen, guys. Let's move that out of the way. Move it out the way. Pound dollar, some of you posted in the chat this 2618 opportunity, which we will talk through very shortly. Other than that, looks as though on the last webinar we were talking about the trend, and the trend is bearish, and so you could then be looking for a bearish move. Just take it from the daily time frame. If you do have anything on the pound dollar, please let me know. First of all, let us zoom out. I do believe price is going to come down to test the close of the candles just here. I've been saying that for quite some time actually, and we haven't as yet quite come down to it. So here on the dailies, move lower, pull back, move lower, pull back. Okay, so I am still expecting price to come down a little lower. The problem is it's just junk on the lower time frames. On the 240. So on the 240, slightly different story. This was the move lower. This was your outside return. This was your move lower. This was your outside return. So if you highlight your actual outside return, it is here. Second chance entry would get you involved with a lower low, lower close candle, which was this candle right here, guys. And because there is no rotation pattern, stops have to go an ATR above the outside return. So you're looking at 28, 30, so about 40. So you're looking at about that much risk for about that much reward, or that much if you're playing for a bit lower. So it was an inverse reward to risk there. So you really needed a rotation pattern to get involved with this. Let's drop down to the 60, and here on the 60, this was a potential entry right here. So this was not an area where you would have just sold a double top. It just wasn't anything. But when we had the confirmation, when it was confirmed and we had the break to the downside, you could have then waited for the 2618, and as you can see, it came up and went past the 61.8, hit the 78.6. and let's just draw this out. The difference a rotation patterns makes to your reward to risk. So you would have got involved here, stops an ATR above the first test, would have put you 13 pips above that level. So it would have been there, and then your reward if you believe it's coming down to this level would have been down here. Okay guys, so this would have been an opportunity to get involved, about 46 pips of risk for around 141. Isn't the highest probability trade, because even though we've double topped here, it didn't occur at the highs of structure. So your safest place for stops is always above the outside return, which is all the way up here. If you have it here with this confirmed double top, you still run the risk of the market coming back up and going higher. But you do have the reward to risk. You have a 3-to-1 reward to risk there. So if anybody took this, you know, it's a good opportunity. What you can do now is when you read the trends, so move higher, pull back, move higher, there's your double top, violation to the downside. This gives you an initial structure low, an indication of trend rotation, a pullback, and right now you've just had a new low. So this is now a new structure low. You confirmed in trend on the 60. Now would be the time to move your stop 1 ATR above the outside return, so you could actually now reduce your risk, which was this much, down to around this much. Okay, because again this is lower probability because the double top didn't occur at the top of structure. So risk, I would implement risk management on this trade and reduce down the risk. Did anybody get involved in it? I know a few of you posted this in. Marcus, potential bear flag on the 5. Okie dokie. Let's go and take a look at that. 15. Let's go to the 15 first. See what Marcus is looking at. His eye is getting trained very, very well. Directional move. Sideways movement in an upward fashion. This is the area that I would pay attention to. The wicks previous structure is typically the point where flags turn. Let's go and take a look at the 5 then. Okay, so this is what Marcus is looking at. Swing in the market, that's what we're looking for. We're looking for a directional pole. Okay, it's going to be difficult, this one. It's going to be difficult because if it's a flag down here, you can see that this test came down to test the closes of the candles. 1, 2, 3, and so wouldn't be a flag that way. You might be able to make the case for a low and tight flag. It'd be pretty ugly. So 1, 2, that would be 3, that would be your 4th for a low and tight flag into that zone. So yep, doesn't occur at a psychological number. Stops, this is only the 5 minute. What's the ATR? The ATR is 5, so I'd go 7 or 8 pips above the high if it's one for you. Just bear in mind that we may actually go a little higher here. We didn't come into the outside return, so I'd wait for a slightly better reward to risk, something like that. Wait for price to come up a little bit. Because the thing is, you can hit a losing streak like I'm in, but if you're taking trades like this, when you come out of your losing streak, very quickly you're going to see those pips earned back because you're getting 2 and 3-to-1 rewards to risks, and within a week, 2 weeks, you can earn back a month's worth of losses quite easily. So yep, potential there. Good eye, Marcus, good eye. Just a little update on the Aussie Dollar CAD, guys. You're getting the move lower there now. You can see that you've actually, that was the turning point at the left shoulder. You're getting the move lower. Let's get rid of the pound dollar. New Zealand yen, what did we look at last time? Okay, New Zealand yen was where we had our low and tight flag hits. Trump came out, big rally, sideways movement since then. Nothing but sideways movements, so I don't think this pair is even worth going over, if I'm honest. Just sideways movement. Now let's get rid of that. Euro CAD somebody wanted to take a look at, didn't they? Euro CAD. Okay. Just before, yeah, we'll come back to this. Looks as though that back pattern came off that we spoke about on the dollar yen last time. Euro CAD, let's do that one first then. I forgot what we were looking at on it. Hey Cody. We've been whizzing through the pairs. A few things setting up. The main thing to watch out for is the low and tight flag on the dailies on the euro yen. Monitor that today, tomorrow, the day after for the breakout. It's the only way that I can get involved with that trade. Euro CAD. So this is the lowest structure level, which was retested, and this was the previous structure level here. So we violated, we pulled back. Just looking at the dailies, I would expect a move to the downside here. As we zoom in, now I looked at this trade this morning. There was something on it. Let's go to the 240. Can't remember what I was looking at. So reading the trend on the 240, move lower, pull back, only just made a new low, and then failed actually to violate this entire level because of the wicks. So this was technically three times it got tested, and then we bounced to the upside. You could have a head and shoulders here. So yeah, looks like you had a head and shoulders here, guys. So you had a pullback, then we held the structure level, so there was no initial structure low below the structure level, so no indication of a potential rotation, and then as we went higher we violated the left shoulder. Then what we did is we came down because of this wick, we held this level again, we went up, and now we've just violated. So this is now a confirmed head and shoulders for me, but was no opportunity at all to get involved with that setup. And there would be, yeah, there'd be nothing really here. Even though high time frame for me, you could see a move lower. You've got this triple retest down here on the 240. So let's just see though what I was looking at initially. So here are the wicks. We did not hold the wicks, so there would be no rotation pattern on the 60. But this is what I was looking at. Here it is. Okay, so you had this little area here. Okay, so you had a double top coming into this very, very minor level of structure. It was a 2618 I was looking at. This was the V point, so for this to be a 2618 you need a confirmed break below, close below this level, and you did not get it. Okay, so even though price is coming higher here, and you could throw in a fib and say, well, 2618 trade, it is not valid because we did not have the confirmed break below, close below. So wouldn't be an opportunity for me. I have those rules that I need to follow, and we didn't have the violation. Didn't have the violation. Take a look at the 15. If it's valid for you on the 15 and we did have a structure hold here, well then yes, you do have a 2618 here. For me though, the trade was on the 60, but yeah, you have an opportunity there then. If it's valid for you on the 15, stops an 80 hour above the high, which is 8 pips, making 88, which is making it there. First targets, retest of these lows. Let me just zoom out a little bit. Yeah, first targets, yeah, a retest of that level, and I would actually then hold secondary targets, see if you can get a retest just above that 140, is that 140? Let me take my glasses off. So stupid. I don't know how my eyesight has got better. I can actually see the numbers without my glasses. I must be turning into Superman or something. It just, eyesight has come back. 14600. Okay. That would be for secondary targets. So you have roughly here, it's a lower probability trade, but 22 pips of risk, 60 for target ones and 160 for target twos. Just going to take another look back at the 15. Yeah, it's a lower probability trade for me, if I'm honest, but with lower probability trades you do need a better reward to risk, and you certainly have it on this trade. Just be prepared to hit multiple losses when doing this, but then be prepared when the winners come to hit multiple winners. It's the way it goes. It's the way the cookie crumbles. Any questions on the EuroCAD? Move that off to the side. Oh no, I wanted to look at the dollar yen, didn't I? We'll call this the last one, guys. So last time we did the webinar, we must have spoken about this back pattern, and I'd highlighted the highs of the wicks to say look for a rotation pattern. It didn't happen. Instead you got targets. So if you're an advanced pattern trader, boom, well done. You have just banked yourself 34 pips, maybe 32 after front running. Let's go out to the daily time frame. Now would be the time as well, guys, to again, if you want me to look at any other currency pairs, just chuck it in the chat. Structure level on at this level just down here, so you can see we've got this and this. We failed to come lower, so I am expecting price to come lower here, reading the trend. Move low, pull back, move lower, pull back, move lower. We did actually violate the outside return here, and then we kind of retested, and then boom, we broke to the downside on the 240. This would not be a head and shoulders for me, guys. Even though we have a swing in the market, a left shoulder, a head, a potential right shoulder, this is not a head and shoulders for me, because we have not come down into structure. Head and shoulders is a rotation pattern. For the market to rotate, for me, it must come into structure. It hasn't, therefore I would only look for a continuation lower here. So let me reload this chart. No VS1. There we go. Okay. So if you're looking at the market coming lower, the trend reads pullback, new low. This then is your entire outside return just here, and quite simply a lower low, lower close for your second chance entry. And you could maybe now use this. You can see that we were just for a few hours here hugging the structure level, and we've put in a lower low, lower close, so you could maybe use that as your entry now. Let's go and take a look at the 60. You've just had a double top. You've now had a confirmed break below, close below. You could wait for a 26.18 trade. That would give you nice protective stops, an ATR above the high, which is 8, going to make you that much risk. And targets, well, you could be a little bit conservative here and say, okay, I'm going to have first targets down here, maybe second targets down there, and then I'm going to hold for third targets down at this lower level, however you want to do it. But you have a potential there. The key thing here is that it has produced a rotation pattern which has been confirmed, and that means you have got relatively tight stops, so a low amount of risk and a better reward to risk. So again, if that's for you, 26.18 trade. Just again, just the double top didn't appear at the top of structure, so again, be prepared, it's lower probability. The safest place for your stop is above this outside return, which is up here, and that would give you a significantly bigger amount of risk. So just be prepared to take multiple shots at trades like that. Okay, any other questions? Any other currency pairs, guys? Just having a quick scout around the markets. Any movement on the euro yen? Not really. Euro Aussie. What else? Just bring back over the pound Aussie. Top of the X leg, guys. Right here. Retest. RSI, you only need it to be overbought 70 on the pound pair. Divergence. That would be your entry. Stops an ATR above the high. Playing for a retest of the lows. Bigger picture is you could be looking for that move lower. Down to this level. Let me just take a look at it on the 5. Yep, there's your retest on the 5. On the 5, you did violate structure, guys, though. On the 5 range, let me just go back to it. Yeah, on the 5 range, you did violate structure as well. The 5 range, I allow for a few pips here and there. So, but yeah, if you wanted to use that as the entry for the bigger move to the downside, yeah, down to this level you could do. It would have yeah, and then secondary targets down here as well. So we'll wait and see what happens with that tomorrow. We'll see if that opportunity came off or not. Move that one to the side. Any other questions, guys? If the pound dollar is a low and tight flag for you, well then you now have your entry, giving you a very nice reward to risk. You actually have a nice area there to hide protective stops behind that 120-100 psychological number, and you have an opportunity at market. So guys, that's it from me for this webinar. I hope you enjoyed it. There will be another one tomorrow. I'll be in and out the chat throughout the day. Not too much setting up for me that I actively want to get involved with. As I say, I am short the pound yen up about 60 pips. Short a couple of the trades. No, I'm long Aussie dollar Swiss up about 60 there as well. We'll see how they pan out. Apart from that, I will see you all in the chat next time.